All right, now that the RBA has cut the cash rate by 25 basis points and pretty much all the lenders are agreeing to pass it on in full, we're going to chat a bit about what Aussie mortgage holders plan to do with their rate cuts, which is apparently not much because, as new research from ING has revealed, more than two-thirds of Aussie mortgage holders actually plan to keep their repayments the same. Joining us to discuss is ING's Head of Consumer and Market Insights and Savings Tip Jar regular, Matt Bowen. G'day, Matt. Good to have you back.
G'day, Dom. Yeah, it's great to be here to chat about what Aussies are thinking about doing with this money they got back from their banks.
For sure, yeah. Look forward to getting into that. I see that you're a busy guy nowadays. You know, when I tune into Sunrise, more often than not, you're on there as well. And I go, oh, hey, I kind of know that guy. So a big coup for you and ING.
On the Savings Tip Jar, exactly.
There we go. But before we get into all the RBA stuff and the research that ING's presented, did you have a savings tip for us? It's something new we're doing in 2025.
Yeah, certainly do. So, look, we did another piece of research recently on how much Aussies are spending on subscription services. $900 a year, roughly, is what Aussies spend. Now, a big portion of that is your entertainment services, your Netflix, your KOs, your Spotifys. And I hate to break it to people, but all the prices seem to be going up at the moment. So Netflix have got rid of their basic plan. They've told customers that you need to spend 50% more if you want to continue to stream ad-free. You know, at the start of the footy season, KO's bumped its prices up by $5 a month, so $40 a month for premium. So my savings tip for all your listeners is to jump into their banking app, search through those transactions, make sure you're still using all these subscriptions that you're paying for because they're getting more expensive. And if you've forgotten about them, then it's money down the drain.
Yeah, good tip, Matt. I think I've currently got about at least 3 of those streaming services on the go right now, probably 4 if you include Spotify. I mean, we do the whole thing where we share passwords with, other family members and friends and whatnot, but it still all adds up. And I kind of wonder, back in the day before all these streaming platforms, when it was just like one big sort of Foxtel subscription, whether it was cheaper back then having that one expensive subscription versus having like multiple. Yeah,
and the big question is whether we'll go back there, right? Will we eventually see an amalgamation of all these streaming services once more? Could be a return of history.
Yeah, it might be handier, as well. I hate sort of bouncing between all the different apps all the time. I got one of those Hubble plugin things because of that, because it's sort of all in one place, but it is still a bit annoying. But hey, get into these results of your survey. So 68% of mortgage holders planning to keep their repayments the same. What's with that? Because I thought mortgage holders were crying out for a rate cut so they could save a bit of cash each month.
Yeah, I mean, it is a bit surprising, right? We thought that, as you say, mortgage holders would rejoice in the fact that there's a rate cut and, there's more money coming into their bank account, get the champagne out of the fridge, pop the bottle, after a couple of tough years with the cost of living crunch and mortgages being so high. We thought that, certainly more Aussies would be thinking about spending this in other ways. But no, the research has come out loud and clear that we're being very financially responsible with our mortgage, 68%, saying they're going to keep the repayments exactly the same. Now, we did the maths on what that would mean, on a $600,000 mortgage on average for an Aussie, a 25 basis point reduction is about $100 a month. So $1,200 a year they're getting extra into their account or can reduce their repayments by, and that's going to potentially shave a couple of years off their mortgage and obviously thousands of dollars of interest as well. So a very prudent response from Aussie mortgage holders, which is good.
For sure. And there's some other interesting results out there too. By and large, people are opting to keep their repayments the same, which is good for the bottom line in the long term, I suppose. But just run us through some of the other stats out there. Maybe if they're not planning to just keep the mortgage repayment the same, like what else are they intending to do with it?
Yeah, well, I think the big concern was that, now that this money may come back into customers' accounts if they choose to change their direct debits, that there would be a big spending spree, right? And it would drive inflation back up, and then we'd be in this situation where we've had one cut and potentially not another one for some time. But the research certainly didn't suggest that. It was only about 3% of Aussies were planning a bit of a splurge on this money that they get back, and it was small things like shopping and, fashion and cosmetics was kind of top of the list there. There's a big portion of customers also looking to save the money. So we know that it's been pretty difficult over the past little period to save money when cost of living is so high and household budgets have been stretched. So lots of other Aussies, about a third of Aussies were choosing to save this extra cash, and they're putting it towards things that, potentially we've had to sacrifice over the past couple of years. So family holidays came out number one on top of that list, and, others just looking to save for, a rainy day fund, a little bit of a splurge fund down the line. line, but certainly weren't looking at splurging it straight away.
Now, one thing I'm curious to know, Matt, and this is mainly for people like me that have never experienced a rate cut, because I've only had a mortgage for 2 years, so I've never had a rate cut before until now. But when does it actually filter through to your repayments? Like, when do your repayments actually drop? Is it a month from now, or is it 2 months? Because I remember with the rate hikes, usually they'd have to provide a bit of notice in the mail, 30 days at least, in just a letter in the mail. And so I wouldn't actually see my repayments go up till it was often like 2 months after the rate change itself. So is that the case with rate cuts?
Yeah, look, it's very similar. I mean, it's a bank-by-bank basis, right? Depending on when your bank announces any changes to your mortgage repayments, then they need to obviously notify customers. So, there's quite a lot that happens in the engine room behind the scenes, spinning up communications to these customers, letting them know, calculating their repayments, making sure that it's accurate because, all customers are on different rates depending on what product they have or if there's any loyalty discounts and all those types of things. So there's quite a lot that needs to happen. But then once you are notified, again, depending on whether you've chosen to pay monthly or fortnightly, will then dictate, exactly when those repayments, are likely to change. The other thing you need to be aware of is, a lot of your direct debits have been set up when you created the mortgage. So many banks will let you know that you need to actually instruct them or go into your mortgage account and actually change that direct debit if you do want to lower it or change the repayment amount that you're making. So it is an important thing to read the letter that you get from your bank. Don't just assume that the cut's flowed through and it flows through immediately. It'll have a timestamp on it to tell you when that happens and anything that you need to do or action to make sure that you can change the repayments if you want to.
Pretty easy plug here for ING in terms of that they were one of the first banks to announce a rate cut to mortgage holders. And then, of course, of the people in your survey who are going to just pocket the extra cash, there's the ING Savings Maximiser there with a high interest rate. But let's just talk about what people are doing in terms of planning to stash it in their super. Is that an idea? Like, what are people doing around that?
Yeah, look, there are a few people that are looking to make those voluntary contributions. It wasn't a kind of huge portion from our research, but we know that, the equivalent of about 190,000 Aussies across the country would be using the savings from their mortgage to actually fund their super contributions, obviously, for down the line. Super typically is something that we kind of set and forget and don't really give a lot of love to. So when you get these kind of cuts from a mortgage or for other, fixed payments in your life, it's nice to show your super a little bit of love. And it's good to see that some Aussies are thinking about that as well. So that's, certainly one of them. The other kind of key thing people were looking to do was invest as well. So we did see a portion of Aussies from the survey that were looking to put some money towards shares and ETFs as a result of these rate cuts. Like I said, it's the equivalent of around $100 a month. So, it's nice to kind of be able to put that into an investment that'll potentially pay off down the long term.
Now, Matt, do you think Michelle Bullock, the RBA governor, would like to see these sort of survey results? She'd be quite pleased to know, I suppose, that 68% are planning to keep their repayments the same and aren't going to go on the huge cash splurge. Because I don't know if you saw her announcement, but she was very hawkish in her language still. Even though she was cutting the cash rate, she was still warning about the dangers of inflation picking back up. So don't you think she'll be pleased to see that ING's revealed that over 2/3 are keeping the repayments the same?
I think she'd be very pleased to see these results, Dom. I think the other thing that she'll be watching very closely is what commitments come out of the government in terms of federal budget, particularly leading into the election year. As we know, our GDP here locally has been pretty flatlined, I guess would be a positive word for it, but a lot of the spend is public spend. So she will be looking very closely at what commitments are being made from either side of the government. It's not the private consumer demand or spend that's actually driving up a lot of the inflation or GDP. So she'll be keeping a very close eye on that. And I think, as you say, be welcoming this news that Aussies aren't going out for a big splash of cash.
Absolutely. That's a really good point, Matt. I think over the last few years, the consumer has been kind of demonized. There's people see a busy restaurant, they go, oh, the posing a very big inflation risk. Just finally, my last question is for you, Matt. What are you personally planning to do? Like, if you have a mortgage, $100 a month, is it going in your pocket? Is it, going on fancy haircuts? Where is that going? Or are you keeping your mortgage repayment the same?
No, my mortgage payment will be staying the same. I think, like probably similar to most Aussies, we're getting more comfortable now with the repayments coming out on a monthly basis. It was certainly hard as the rates kind of hiked up and the household budget got thinner and thinner. But we've now been doing it for a couple of years now. Things are kind of in routine; they're in a pattern. So if you can do it, it's a great kind of financial strategy to help get ahead and shave years off your mortgage and a little bit of interest off as well. So yeah, we'll be eating some of my own advice there and keeping repayments the same. It's nice to know that we can reduce them if we do want to put some money aside for a holiday or whatever. But no, for now, we're going to keep things as are.
Oh, come on, Matt. You got to treat yourself, go out, get those fancy haircuts, take that fancy holiday. Life's for living, right?
Very true, very true. But I'll do that once my mortgage is under control.
Definitely. No, very wise words indeed. Well, Matt, it's always a pleasure having you on the Savings Tip Jar. Thanks so much for your insights.
Thanks, Dom. Thanks, Harrison.
Thanks, Matt.